Good morning, and thank you for joining us today for the portfolio review and Q&A session for the Salt Money stock options community. I'm very excited to share some cool updates, and I hope you can learn from it, take away as much as you can, and increase your passive income earning capacity. It's good to always know and learn some new financial concepts and terms. It helps us get one step closer to financial freedom. So let's dive right in. Before we go deep under the hood on how stock options work and how you can generate high returns with it, we want to go over a disclaimer here. This session is for educational, informational purposes only. The returns discussed are not guaranteed in any way, and future returns are not dependent or reliable on past results. So keep in mind that option trading involves significant risk, and it's not the right thing for all investors, and losses can even exceed initial investments. So no professional relationship is established by watching this video. Always consult qualified financial advisor, tax professional, or legal expert before making financial decisions. Okay, now that we have that out of the way, let's dive right in here. First, I want to review a cash secured put that was placed last month in July, actually. It was placed in the beginning of the month. Actually, let's take a look. It was placed at the end of June 27th, and it had the expiration of July 25th. So it was running about one month. And what is the cash secured put? If you're totally new to stock options, that's basically the scenario where you have some money sitting in your bank account, and you decide you want to earn passive income, cash flow, or premium by being okay with buying the shares of a company at a specific price. And you sell a put to say, I'm okay to buy the company Rivian, in this case, or IVN, that's an electric vehicle company. I'm okay to buy this company at $13 a share. And I'm okay to buy 100 shares of this company by selling one cash secured put. That's kind of what happened here. And the market price at the time was around $14, $13.50, that range roughly when we sold it, which is kind of the sweet spot when you sell a cash secured put. You want to make sure the price that you sell the option on, in this case $13, is slightly below the market price. Can also be good to be like 2 steps away if you look at the different options available. That way you keep your risk at bay, and you're actually acquiring the company at a discount while getting paid for it. That's kind of the nice thing and the sweet spot for selling stock options. And what happened when we sold this? So initially when we sold this cash secured put, $46.96 were deposited in the account. And if we break that down into a return on investment, that's roughly 3.46% return on investment for about 1 month of time, right? It's slightly over a month. Actually, no, slightly below a month, like 28 days, 29 days. So that premium, we rounded it down here to 45, just to generalize it a little bit. If you make a trade like this once a month, for example, these are the premium returns that you can expect over time, assuming that you can always deploy all of the cash that you have available in the account, which is not always the case. So oftentimes there's a little bit of cash sitting there. So that's why we also adjusted some of these numbers here. But just as a rough example, you add the premium that you earn to the cash the next month, and then you can sell a little bit more puts with that. And over time, you achieve a return of 41.54% before considering compounding. But if we take compounding into the equation, we now have a return 50%, over 50% slightly on the cash that we put aside for this cash secured put. So I think that is pretty good, a pretty good return. However, you have to keep in mind, when you sell a put like this, you can very easily get assigned on the shares of the company, right? So you may end up buying Rivian at $13, and in that case, you can actually you have to kind of sell an option on the other side, which is called a covered call, to sell the shares at the strike price that you bought them at or above it, to kind of keep that premium flow going. That's kind of the basic strategy on how to generate cash flow consistently with stock options. It's also called the wheel option strategy. If you want to research it a little bit on Google, watch some general YouTube videos explaining it. That's the main strategy that we use in the portfolios, and that we also recommend beginners to start with, since it's not too hard to learn. The most important thing is to keep in mind at what price you sell the options at. Expiration dates are important. And let me do one quick, no, I think it's okay. Yeah, expiration dates are important, and the company that you choose to sell these stocks on is really important. It needs to be a solid company, something that you can hold for the long term, so that you'll actually have a good outcome going forward. Okay, so the portfolio that we are sharing in our option sellers community as an example, kind of to get started with an investment portfolio, started at around $10,000 last year, and even lower in the beginning of the year. And we are now at about $23,900. And the last month had a pretty decent growth. We're showing 6.92% in growth. And that's actually a little bit above what we see the average monthly growth would be that we expect from a portfolio. It's more like in the 3.46, 3.5 range when using this strategy. But it was a good month for the portfolio. Stock market was overall trending up a little bit, and that's kind of showing in the results here. We had a few dips as well. The most recent one was last week, when investors were a little bit concerned that the head of the federal bank in the US, Jerome Powell, might not be too keen on lowering interest rates quite yet. So that's why the market dipped a little bit there. They thought probably the rates will still be the same, and Jerome will talk about it that way. But then when the event happened on Friday, where he spoke publicly, he actually acknowledged that there is concern about the labor market and interest rates are in the cuts. So that's what we are looking to happen next. Probably in September, we might see some move in that direction. Let's look under the hood a little bit in this portfolio as well. What do we have in there? So the top position right now in our Roth IRA portfolio, which, by the way, is a stock portfolio that can grow tax-free. Even when you take money out, let's say 20, 30 years from now, you don't have to pay any taxes on what you take out, which is great when selling stock options, because you really increase your returns on a stock portfolio when you do that. And it only takes 30 to 60 minutes a month to do this. So it's really a great strategy to kind of improve the returns on your investments and build passive income strategically. Okay, so we have 300 shares of SoFi, a financial technology company, in here with a current equity of 7,600. One thing that this view is not showing, that we have some covered calls that we sold on these underlying shares. So we have covered calls going that are priced, I think it's around $25, if I remember correctly. And then next is Riot Platforms. That's actually a cryptocurrency mining company. And one thing that's interesting about this one, they're not just mining Bitcoin mostly and selling them. They're also building a treasury of cryptocurrency. So they're basically acting a little bit like MicroStrategy, if you heard about that company. And that's how they improve their returns and kind of the future outlook of the company somewhat. Then we also have Open Door Technologies. That's basically a company I started using this portfolio very early because the stock price was low, around $2.50. So you could basically sell a put option on it for low risk. And recently we kind of had a recovery in this company. It's now at share price of $5.20. Some of it is a bit meme stock driven, to be fair. So there have been some people on social media encouraging others to kind of buy it to pump the price higher. That resulted in some volatility. And since that started happening, I have definitely stepped back from engaging with this company. I prefer if stocks grow organically in value because of the value of the underlying business. But I still have some shares here. And yeah, I think the option that sold, the covered call that we have sold on top of it, is priced around $4.50, $5. So that will probably get called away at some point. I'll be totally fine with it once that happens. The cash around $1,500 right now would get released, and I can use that to sell more cash secured puts. Okay, there's also some individual shares that I hold in here, like S&P 500 ETF, some Tesla shares that actually have had a decent gain. And this is some direct Bitcoin ETF. Just to diversify the portfolio a little bit, the majority of the funds in here are used for generating premium from selling options, but some of it is also just traditional investing, let a little bit of a base grow over time. And one thing that I would consider doing with some of these holdings, especially the S&P 500, if we have a big market drop at some point, I might consider selling some of these shares. Usually S&P 500 does not drop as much as technologies that I might be interested in buying in a market crash or correction. So that's a move that is enabled by holding some of these shares. Yeah, a few more shares down here, but I think we can go on to review a few more trades before we get to the Q&A session here. I see our option selling community members have started joining as well. So we'll get to some questions that people have in a little bit. One new trade that I did this week, which I don't do a lot, but sometimes when you sell a cash secured put on a monthly basis, you see the stock go up as a result, and then the value of your put option goes down significantly, which is actually a great thing for option sellers if you have sold the option, because that means if you want, you can now close that option and capture most of the gains, and you have the cash freed up immediately to sell another put option if you want. And that's basically what I did on August 22nd. That was maybe a Thursday or Friday. So I closed this for $5 per option, and actually closed two options here. And I had previously sold this for a premium of, I think, around $50 an option. It doesn't show it in the summary. So basically, it means I captured 90% of the premium while the option still had over a week left to expire. And that's a great return. And then let's go to the next trade here. I actually bought a put option, a long-term put option. So this is something that's a little bit unusual. It's not part of the basic wheel strategy. But since we had this correction on Thursday, I think it was last week, I think a little bit on Wednesday as well, I saw that AMD had dropped significantly in value. And instead of buying AMD directly and just buy one or two shares, I said, I think AMD will go up over time because we have this AI trend going on where people need more chips. The gaming community is also not slowing down from what I've seen. They're also buying AMD's products. And we have data centers that need a lot of computing power. So I think AMD will do pretty well over time. So I decided to buy a call that expires in 2026, end of March, at $12. That call cost $300. So that's basically money that you have to invest, but then it equals owning shares at $12 a share. So total of $1,200 value that you kind of own or control with this. And one thing with this specific stock I'm using here, AMDL, that's actually a leveraged ETF, and it will go up or down twice the price roughly that AMD is moving up or down. So this is very risky. I don't necessarily recommend doing this unless you deeply understand what you're doing. But I'm just being transparent on some of the trade moves I made last week so people can learn from it. Okay, we have a few more trades that happened last week. The first one is more of a traditional cash secured put that was sold. I saw that MicroStrategy, the company that is kind of a Bitcoin treasury, went down in value significantly, along with some correction in the Bitcoin price. And I decided to sell a put on MSTU, which is also a leveraged ETF similar to AMDL. One thing that's helpful with these leveraged ETFs is their share price tends to be lower than the price of the company. I think MicroStrategy trades around $330, $340 a share. So that's a lot of money if you want to sell a cash secured put, 400 shares of that, right? It's like $34,000 that you have to put on the line, which is pretty risky. And I couldn't even do it in this portfolio. So if I sell a put on MSTU for $5.50, I only have to put $550 on the line. So that's much more manageable from a risk perspective. So I sold 2 of them here, and I actually earned a total credit of close to $80, which is great for the amount of money on the line. But keep in mind, this is leveraged, so it's very risky. Bitcoin could continue correcting, or MicroStrategy could go down even if Bitcoin recovers. So it's definitely more of an advanced trade. And then the next one we see down here, that's actually a yield ETF. This one will pay you, I think, either weekly or monthly on dividend based on the underlying options that are held in the ETF. It's also linked to MicroStrategy, so the same company we're looking at here. And for this cash secured put, I had to put $1,700 on the line, and I earned $92. Okay, that's basically it for the trade review. Let's take a quick look at the community. If you are a part of it, make sure you check out the Classroom tab, because that's where all the good stuff is posted. We have the video trainings there. The main one is the Option Selling Bootcamp, where we go in depth into the strategy that I'm talking about here, how you can grow your stock portfolio strategically with selling options. And then we recently added another course that talks about the value of rolling stock options. That is also available in the Classroom tab. And just for a limited time, it's possible to join this community for only $7 a month. That's the founder's rate. That's going to go up over time. So you can go over to saltmoneyoptions.com to join today and lock in that low rate for life. We will actually never raise the price, even with inflation and everything. The way that Skool works, that price stays locked in. So it's a great benefit for the members. Yeah, and then if you click on the Option Selling Bootcamp, the main course, this is what it looks like. You have the different sections where we cover the topics that you need to learn in order to sell stock options with confidence. And you have videos and text content that you can go and implement. So that is basically the summary of the course. Join us at saltmoneyoptions.com to jump on. And we will now transition to our Q&A part of this live stream. So that means the public live stream is ending, and you can hop over to Salt Money Options if you want to be part of the Q&A and ask us your questions. I hope you have a good rest of your day.